Hi guys, welcome back. So today we're going to be starting the consumption space. So I'll be doing two companies in the consumption space. One is Metro Brands Limited and the other is Indigo Paints. Yeah. So as you all know, you're right. We are playing three themes. One is manufacturing, consumption, and the other is financials. So today we'll do the consumption space. I'm going to start sharing my presentation. So right. So two companies. The first company we'll be doing is Metro Brands Limited. Right. So the first thing first, we'll start with business model, right? Let's understand what does Metro Branch do? How are they different from the other footwear sectors that are there, right? Sorry, other footwear companies that are there in the sector. So, as you all know, Metro Brands Limited manufactures and designs and sells shoes, right? Different kinds of shoes. So, what makes them unique? First thing first, there are four things that make them unique. First thing is Metro Brands Limited is a design company. What do I mean by design companies? These people, although yes, they you know that they manufacture and they sell their shoes, they don't have a manufacturing unit. Which means what? They design their shoes, right? They will design like, okay, this will be the design, this is the kind of material that needs to go for the shoe and everything, and they will outsource this manufacturing to a third party, to somebody else, right? What is the advantage over here is, since they don't have a own manufacturing plant, their fixed cost becomes very low, right? That is one thing, and it becomes an asset light model. So this is their again unique advantage compared to the other footwear companies. Like for example, if I have to take Relaxo, yeah, Bata, yeah, Khadims, right? These people have their own manufacturing plant. Now, what happens is when you go for a downturn, these manufacturing plants will add an extra fixed cost. So this is their one added advantage. The second thing is premiumization trend. So what in this premiumization trend, if I have to talk about specifically, see if you go back and see if you've been here in the ERP for the last 1 year, I think you're aware of this, but let me just brush up on this again. So what happened is back 2 years back in 2021, the government came up, for the entire footwear sector, they increased the GST. So it went from 5% to 12%. That is one thing. The second thing, what happened, since we were coming out of COVID, there was entire supply chain disruptions. And because of that, the raw material price increased. As a result, the companies that were selling products, yeah, products under 500 rupees or between 500 to 1000 range, but especially below 500 rupees, these products or these companies got hit really badly. Why? Because एक तरफ से आपका GST increase हुआ है, and the other side your raw materials also has increased. And since you're catering into the 500 segment, you under 500 rupees, you can't even increase the price यहाँ पे, right? Because if you increase the price of let's say एक हवाई चप्पल and एक हवाई चप्पल, या like under 500 rupees ka jo bhi shows, people will go and find an alternative for that. So they couldn't even increase the price. As a result, what happened? There was margin, like their margin started contracting, and then the company started posting losses. But here Metro Brands, if you see, if you compare the last 1 year, if you take any footwear stocks, if you see, Metro Brands has performed really well. The reason, because they were catering always to the premium segment. They played the premiumization trend really well. They were like, no, our customer category is different. We are going to cater only above 1000, specifically 3000 and above. Because of this, they were the outperformer in the entire footwear segment. The third thing is, they act as a one-stop shop. Agar aap dekhte hain yahan pe, can you see here, they cater to everybody, right? They cater to women, they cater to men, unisex, kids, everybody. So that's one thing. So if you go to Metro Brands, like if you go to their shop, like you can go as a family and you can shop for everybody. That's one thing. The other thing as one-stop shop that I want to highlight here is, if you follow my cursor here, can you see the price range? They cater to all price points. All the majority comes from this above 3000 category. You can see 44%. Again, focusing on the premium segment, can you see they have hardly anything in under 500 and 500 to 1500. Majority comes from above 3000 category, which is very, very rare, right? So here also, can you see, you can get price point, different price point ka range. Or another thing is, like, see, you can go not only as a family, not only as a different price point category. यहाँ पे अगर आप देखोगे brands में, if you go to Metro, what you get, all these loafers and ballerinas. You go to Mochi, you get this high end shoes, like above 4000 ranges, such as your heels and boots. You go to Crocs. I mean, I think you all are aware of Crocs. Walkways are like a bit like 500 to 1000 का आपका चप्पल मिल जाएगा. And then fit flop is again premium category of chappals, like Birkins. If I have to give you an example, you know, एक chappal cut will be here, one will be cost will be like 7,000 and above, the starting price point. So as a result, they act as a one-stop shop. So main thing. Another thing I'll also highlight here is, if you can see, this 500 to 500, 1500, especially this this below 1000 category, if I have to take, it contributes to 10% in the total revenue, right? I remember Nissan Joseph coming and telling, you know, they're going to scrape this off completely. This below 1000 category will not be there. In fact, it was supposed to start yeah. So in fact, it was supposed to start from this quarter, that is Q4, but I think they have some more inventory left. So they want to clear off the inventory completely. So going forward, even this 500 to 1000 range will not be there. Below 1000, nothing will be there, right? Going ahead, they're also telling, if they were getting even some revenue from this, they wouldn't even be scraping out of it, right? This clearly shows that below 1000 ka jo bhi category hai, that is clearly not performing well in the market. To give you again another just a brief is, Bata has less than 50% of their product category coming from less than 500 range, and that less than 500 range completely tracked their profits in the last 2 years. If you want, you can just go see. Bata really suffered because of that under 500 category. Similarly with Khadims and Liberty also, because they have majority of the portion, around 60 to 60% coming, 60 to 70% coming from under 500 to under 1000 category, even they suffered. On the other hand, Relaxo, you know the story really well, right? Like the company, like complete whatever they had done in a decade got wiped off in 2 years because of the same thing. Because you know, Relaxo ka product category is what, hardly between 500, like I would say 95% is under 500. So even they suffered. Like that is why the whole premiumization trend, you know, really works. The second thing is the last thing, like I covered 4 points, right? So design company, it is a design company, premiumization hai, and it is a one-stop shop. The last thing is how they sell the third party brands. If you go to other how do I tell, other footwear shops, they one is either they're selling their own brands, or even if they sell the third party brands, it doesn't have any USP there. So what is the USP here they have? When they see, can you see here, they sell their own brands. Own brands ka revenue is 75% of the revenue comes from own brands. What are their own brands? Metro Brands, Walkway, Mochi, these are their own brands, which means what, they started this company, they decide, they have complete control and ownership here. Versus the 26% जो आ रहा है, this is from third party brands. Now third party brands क्या होते हैं? These might be foreign companies that they want to start catering to the Indian segment or the Indian masses, but again they don't understand the demography of India, you know, or it can be too taxing for them to open up stores here and everything. So what they do, they license out everything to Metro Brands. So Metro Brands has a license to sell these third party brands in India, so they can open the store. See, they don't have control of design here. Understand the difference. own brands में आपको design भी कर सकते हो, manufacture भी कर सकते हो. जब third party brands होता है, there what you do is you just can sell the products. They will design the products, they will give you the inventory and everything. You will have to sell the products here, and you get a certain, you know, you have to give them a certain commission. Just like how Devyani does for KFC, right? Same thing here also. So what are the foreign brands or the third party brands that they own? Crocs hai, and FitFlop, and the other thing is Fila. Because as you can see, in earlier Metro Brands Limited didn't have a sneaker segment. They had everything, right? All kind of shoe categories they had, but they didn't have a sneaker segment. So right now they acquired, I think last quarter the acquisition completed, and they acquired Fila brands. Now Fila also is a premium segment. It comes in the same range as Nike, Adidas and all. So this gives them again an entry to the entire sneaker segment. So वहाँ पे so 3 brands that are there: Crocs, FitFlop and Fila. Now what is the again unique selling here is USP, unique selling product, or the unique selling point of this business here, even with the third party brand, is they get only those international brand that has a brand value. जैसे Crocs हो गया, and where there is no replacement for this brand. Like for example, if I have to take Crocs alone, right? First of all, it is a foreign brand, and आपको जो Crocs का जो है वो alternative कहीं नहीं मिलेगा. Can you just think in your mind what is the alternative for Crocs? Absolutely nothing. Crocs का alternative है Crocs ही है. The only alternative for Crocs you're going to find is, you know, just like how Adidas sells, you know, the alternative for Adidas would be Abibas. You know, the cheap low product and the fake product. Other than that, Crocs ka koi bhi other, how do I tell you, there is no other replacement. The second thing is FitFlop, right? FitFlop is also, like I told you, what it sells chappals. but the chapels are placed at 7,000, 8,000. So here what comes is a really brand value comes. That is one thing. And third thing is also with filler. Why I'm stressing out on this point is because if I have to compare it again with the other footwear companies that are there. One good example will be Red Tape, right? Red Tape was again, it was under Mirza, or last quarter uska demerger hua, and Red Tape is now listed separately from Mirza. So Mirza ka kya hota tha? Leather business hota tha along with the footwear business. So it used, the leather business used to drag this segment down. So what happened? Mirza demerged, Red Tape demerged from Mirza, and Red Tape is now again just a footwear company. So Red Tape kya karte hai? Red Tape has their own product as well as they sell third party products, especially the products or the brands that are there in the UK, London especially, and they sell it here in India. Now, why here they don't have an advantage is here. One, uska koi bhi, if you go back and listen to Red Tape ka jo brands they sell, the third party brands they sell it here, the brand doesn't have a value. Yeah. So the brand doesn't have a value. That's number one thing. एक है brand का value नहीं है. And the third thing is the brands that they sell, whether it is loafers होगा, या shoes होगा, easy replacement है in Indian market itself. For example, loafers का you can go to Hush Puppies from Bata. So there is nothing unique about it. So now you understand, even if they're catering to third party brands, how they are unique and why it is so important for them, right? So that is one thing. So that is more or less a business model, and you can see here आपको अगर segment क्या revenue segment चाहिए, so it metro cities में 30% आ रहा है, tier 2 and tier 3 cities 30% and 14%. So yeah, this is where they cater to. I hope the entire business model you have understood here. Yeah. So let us understand the outlook and capex kya ho raha hai. So first of all, you know that we always target companies that have the ability to double their profits in 3 years, so they can give us a 20 to 25% CAGR. That is our aim. So how are these people aiming to double their profits? How is this whole journey taking place? So what has happened is, earlier in FI starting of FI23 जो था Q1 FI23 में था, Nissan Joseph, he came and he told we aim to double our store count. Sorry, not double our store count, but I think earlier their store count was 630 and we want to increase it to 900. So कितना हुआ? We are going to add 260 stores. अगर आप 260 stores 3 years में add कर रहे हैं, तो एक साल में आपको 86 stores add करना पड़ेगा, right? अगर 86 stores आप साल में add कर रहे हैं, 86 divided by 4 is 22. So you will be adding 22 stores in a quarter. So this is again a rough calculation, right? 22 stores in a quarter. So this has to be the store plan. Now, if you see the last complete year, no, they have done absolutely well. In fact, they have exceeded more than 86 stores in the year, right? Last year, not last year, sorry, last quarter, Q3, is a very seasonally high quarter for any consumption business, because there are a lot of holidays, there are a lot of festivals that happen, and as a result, the consumption, people tend to do a lot more shopping in Q3. So last Q3 में क्या हुआ? They opened 54 stores. हमारा count कितना था? They had to open 22 stores, but they opened 54 stores. And here in Q4 they opened 19 stores this quarter, right? So the total store count कितना हो गया अभी? 739. In the last 1 year, from 630 they have gone to 739 stores. That is also greater than what we were targeting, 86 stores in a year. It has been more than 86 stores in a year. So that is one thing. Another thing I would like to highlight here is, can you see what, I don't mind you opening stores, but at the end of the day, if you're opening stores, your stores shouldn't come at the cost of your margins. Aapka EBITDA margins, gross profit margins, nothing should come at the cost of it. If you see here also, can you see the EBITDA margins are also has increased, right? And if you see over the quarters also, it has remained stable around that sweet spot, right? The main important thing I would want here to see is the gross margins here. The gross margin usually for Metro brand, their sweet spot is between 52 to 55%. So in spite of opening so many stores, right? In spite of opening 19 stores this quarter, 56 stores last quarter, the margins has not been affected. The margin has still remained same in the same range, 52 to 55, which is a sweet spot, right? So that is one thing. Right. So now this is a capex part, right? The let's just see what is the management commentary kya ho raha hai on the ground level. So first thing is, a lot of people think that premiumization trend will work only in the T1 cities, because agar aap metro cities mein jate ho, T1 cities mein jate ho, the spending power is more, because people earn quite a lot. And if you go into metro cities and T1 cities, you will find mall everywhere. Right. And these kind of companies, where you're talking about aspirational brand, and when you're selling shoes greater than 3,000 rupees, of course, right, aapko locality, maybe, the locality that you will put your store also has to be posh. right? So people think what, okay, these kind of brands don't do well in T2 and T3 cities, but that's actually wrong. If you see, the revenue from 3000 rupees category has increased from 40 to 44%. ये वाला है, it again shows, or below 1000 category का decrease हुआ है, again showing premiumization is doing well in this country. The second thing is the share that comes from T2 and T3 cities. Earlier, T1 and T2 cities were contributing totally, if I have to tell you, I think they were contributing around 30% or something, and now that share has increased to 30 to 35%. Again, showing that the premiumization trend is not just in T1 cities, but T2 and T3 cities also. The next thing is, see, because when I'm talking about growth, जब हम growth calculate कर रहे हैं, we need two kinds of growth. एक है volume growth, एक है value growth. Volume growth comes by selling more units of your chappal or your footwear. Value growth comes by increasing the price. Now, I would need a combination of both. If you see, the company sold 1.45 crores of pair. I think at the same time last year, it was less than 1 crores. And same time last quarter, it was, I think, 1.12 crores, in that range. So even in that way also, we have seen the number of pairs of shoes has increased, and the ASP, that is the average selling price, has been increased to 7 to 8%, which means what, एक price hike हुआ है 7 to 8% का. This I will highlight why it is important. One more thing is, आपका जो what do you tell, when you when आपका raw material का price increase हुआ था, right, and GST का increase हुआ था, Metro Brands was the only company that could increase the price seamlessly and didn't face any shortfall or footfall in their stores, or short in demand. In fact, people tend to buy these products more, because think about it, right? You're already spending एक Crocs खरीदने जा रहे हो, you're spending around 4,000 rupees in one Crocs, right? So of course you won't, if 4,000 rupees अगर 4,200 करेगा तो आपको फर्क नहीं पड़ता. पर वही हवाई चप्पल जो 200 rupees में आप सेल कर रहे हो, उसका अगर आप 250 भी करोगे ना, that's a 25% increase, and the people who are buying it, it is a very a pinch in their pocket. So now you understand why this whole premiumization trend worked for them. The other thing is, now as the क्या बोलते हैं, as the raw material price came down, right, Metro Brands is the only company that didn't decrease the price of their shoes. Whatever they had taken the price increase, they kept up with the price increase. As a result, what has happened, एक था आपका raw material का price घटा और आपने price increase किया, so margins also expanded because of this. On the other hand, if you see Relaxo, they realized that they couldn't sell, they increased the price to keep up with you, to maintain their margins, but they couldn't cater to the demand. Nobody was buying the chappal after they increased the price. Now what they have done, their volumes have increased, but the volumes increased because they decreased the price, right? I don't want a company like to volumes increase kar rahe ho, but once you increase the price, you have decreased it. It just shows आपका pricing power ही नहीं है, आपका bargaining power ही नहीं है. Similarly with Khadims and Liberty also, right? And आपको जो, even in terms of Bata also, Bata, although they have increased the price and they've stayed in that range, उनका majority sales आता है वो hush puppy से, जो hush puppies and clothes which are above 1,000 2,000 range of category. So now you understand why Metro has done incredibly well, like not only in terms of shoes and not only in terms of volumes that they've sold, and also in terms of pairs. And one more thing also, if you probably read, you might have this doubt, like, Prerna, listen, Metro has done only 1.45 crores of pairs of shoes, whereas Bata has done 4.5 crores in a year, and what is that brand? Relaxo has done around 2.45 crores. Sorry, not 2.45, 5.4 crores. Please understand one thing. Metro का एक जूता होता है 3,000 range का, 4,000 range का, 5,000 range का, right? और Relaxo का होता है 200 rupees का. So of course वो ज़्यादा बिकेगा, right? 5.4. I mean, not ज़्यादा बिकेगा. That's not the right word. But when you convert it into value, like they will of course sell more volumes compared to this, because the amount is very less, but here you understand the amount is more, right? One shoe catering to 3,000, they have to sell 100 shoes for the same thing. So I hope that part is clear, right? So this is the outlook and capex. Now I'll just go to the numbers. We'll see how the company has performed. Yeah, another one thing I would like to highlight here is, wait, I'll do that later. Yeah. So one is revenue has been up 35% year on year. Don't focus on the quarter on quarter. I know quarter on quarter, the number looks huge, but understand this Q3 is a very strong quarter and Q4 is weak because of course seasonal hai. Q3 mein aapka Diwali hai, Dasara hai, all of those things are there in Q3. So like I told you, Q3 is the best quarter in the whole of the year. And because of that, sales Q4 में, because the base is so high in Q3, right? Q4 ka sales will look low. But having said that, this is nothing to worry about. The other thing also why Q4 ka sale is low is because in Q4 they have end of season sale. Now what is end of season sale? आपका inventory रहता है, you can't sell this inventory, and you can't carry forward this inventory to the next year. So what you do, you sell these shoes at a discounted rate. Because of this also आपका revenue घटता है, right? As a result, because of these two things, the quarter on quarter sales has been down. Now even if you see here, PAT, we tell you like revenue and PAT. अगर seasonality होता है, what we tell you to just check year on year revenue and PAT. Even if you check year on year revenue and PAT here also has decreased. Now the reason, sorry, revenue has increased, the PAT has decreased. Now the reason for PAT being decreased year on year is I told you, right, they had acquired Fila का एक Fila, that sneaker segment they have acquired here. So in that acquisition they spent 14 crore, and Fila was a loss making company earlier, and it was under Gravitex brand. So that was a loss making company. As a result, they had spent 14 crore, जिसके वजह से actually PAT is down. Actually it is flat, but I've been very like giving the exact numbers. So as a result, PAT has been flat or down by 1.56%. Other than that, there is no reason for this year on year. If I take that 14 crore loss, and if I exclude that and take the profit has increased even year on year, right? And again, 19 stores added this quarter, which is what we look for, and the store addition has gone to 739. Yeah. Hmm. Yep. Yeah. Now I'll just go to the financials. Let's just go. Always check for consolidated financials, because like when you talk about um the third party brands, there could be subsidiary, they can be counted as subsidiary, and they will come under consolidated. So always check for consolidated. So pehla hota income statement, right? Income statement mein what do we check? First we check is revenue has increased year on year or not. If you see year on year increase hua hai, quarter on quarter घटा हुआ है, I explained you the reason, seasonality factors is, so it is absolutely no problem. The second thing we see is other income. I don't want my total income का ज्यादा income, I need majority coming from revenue from operations. मतलब क्या? I need most of it coming from you selling shoes, not by other income. By you selling certain, maybe you'll sell some inventory or some plant or something. I don't want from that, right? I need it from revenue from operations. So if you see here also, other income has hardly increased 14 to 18 crore. 4 crore is not a big deal out of 562 crores, right? So not a big deal. The next thing we see, any exceptional items are there. There is no exceptional items as such, if you can see here, right? Then we see employee cost. We have to see अगर employee cost बढ़ता है कि नहीं. Year on year employee cost बढ़ा है. I won't see quarter on quarter also, because see, there will be so many things that happen in one quarter to another quarter, right? Especially when you talk about stores, you're adding employees, maybe there will be some employees and then you remove some employees, like in the sense like store में there salesman का इधर उधर हो सकता है. So I don't want to check quarter on quarter. Year on year is a right or the apt comparison for employee benefit expenses. Next is we're going to see profit after tax for the period. Again, profit after tax has been flat, as you can see, year on year 69 to 68 crores. And I told you this is only and only because of what Gravitex ka acquisition hua hai, that 14 crores. If I remove that 14 crores yahan pe, right? If I add that 14 crores, now then it would have been how much? 68, 78, 82 crores ka profit hua hoga. Quarter on quarter, again because of seasonality, you don't have to compare. Again, PAT margin also has reduced. I think the PAT margin here is around, I think 14 or 15%. But again, that is also, PAT margin has affected because of the end of season sale. Like I told you, all of this is seasonal. It is nothing to worry about, right? Right. So next we go for into the balance sheet. अगर आप balance sheet में देखते हो, right? Uh, the first thing I'll check is for the asset liability. Sorry, asset liability mismatch. If you see there is no asset liability mismatch, अगर आप देखते हो current asset जो है, yeah, it is 15 point. Yeah, total current asset जो is 1000. It's in crores, right? Yeah, 1523 crores, and liabilities जो is 535 crores. So of course, even if I have to take current asset by current liability, if I have to take it, it is still greater than 1, right? So there is no asset liability mismatch here. The second thing is book value increase हुआ है कि नहीं, right? Because I want the cash also to increase the equity here. If you see, there has been equity यहाँ पे कितना है, 1287 to 1574, so it is an increase of 23% in the book value. Then the next most important thing for me is ROE, right? For me, I need the ROE of the company also to increase. If you see the ROE is nothing but net income divided by equity. If I see that, even that has increased from 16 to 24%, right? So even that has increased. So all of thing is good. I just want to highlight here one thing. अगर आप इन्वेंटरीज देखते हो, राइट, इन्वेंटरीज बड़ा है एंड इट इज नॉट अ स्मॉल अमाउंट ऑल्सो. इफ यू सी 424 करोड़ से 645 हुआ है इन्वेंटरी, सो इट इज एन इंक्रीज ऑफ 52%, राइट? सो नाउ देयर इज अ रीजन फॉर दिस इन्वेंटरी इंक्रीज ऑल्सो. सो व्हाट हैज हैपेंड इज, आई थिंक BIS, right? Yeah, this slide, if you see the Burea BIS, it is a government, how do I tell this? It is a government government operated thing. So BIS, they check for the quality control and everything, right? It's a department that checks for quality. So BIS, they've come into the footwear industry now, and they've laid out some regulations. So whatever leather that goes into the manufacturing of this of this footwear, they have given some quality, like it has to be of so X and X quality. Just like, for example, आपको अगर मालूम होगा, when I think earlier, I don't remember the year exactly, but I think all of you would be aware of it, was in gold. The earlier gold, there was no quality or nothing. You would just buy it on the basis of trust. But there was a lot of cheating happening. Customers would get cheated on for gold. As a result, government came, the government interrupted, and they kept a hallmark, 916 hallmark, KDM hallmark, right? BIS hallmark. You would have seen that. So why? They could protect the customer's interest, and also the supplier, also the like, for example, jo bhi gold kharida hai, the companies, even they won't get cheated on, right? So because of that, they did this hallmark and everything. Similarly, here also, the government has come today into the footwear segment, and they are laying out some regulations for the quality of leather and everything for two reasons. One, again, so that the customer gets a better quality in shoes, and the second is, of course, that the companies that are there, they are adhering to the standards. Even they don't get cheated on. So these two things. Now, because of this, what will happen? One is, again, the shift will happen from unorganized to organized sector, because many of the unorganized sectors show hai, they won't be able to comply with this. And when you set a standard for certain things, of course, those raw materials will become expensive, right? So these people might not be able to afford from it. Again, from unorganized se organized sector mein jayega, right? All of this demand will go. The second thing here also, another thing is, because of this, now whoever was now buying some cheap quality of leather, now they have to adhere to this quality. The demand for the leather will go up, and the supply might not be there so much. As a result, what they have done is, they have stocked up the inventory. Because of this, the inventory has increased. And if you remember exactly, even in 2022 and not 2021, even in 2022, the same issue had happened. Because of COVID, wo supply demand ka issue hua tha, right? And they were not getting the leather, because the leather prices had gone up. Like I told you, the raw material prices had gone up. Metro Brands was the only company that was able to, that didn't feel any pressure because of the raw material price increase. Not only that, kya hota hai, you buy these raw materials at excess cost, right? And then what happens? You're left with high inventory, right? And you can't even increase the price. Ye problem bhi nahi hua tha. They were very, very good with how they managed their inventory, unlike Relaxo. Relaxo ka problem kya hua tha? First, they didn't buy the inventory, and they didn't stock up on the inventory. So of course, their margins got squeezed. The second thing, what happened with inventory with Relaxo is, when the prices started coming down, they had hoarded up so much inventory that again they couldn't take advantage. Like, see, prices, raw material ka prices ghata hai, and you have increased the price of your products here, so aapka margins expand hota hai. But here what had happened, they had bought such high inventory, high price ka inventory, and prices increase bhi nahi ho raha hai, to aapka margins bhi expand nahi hua. So they had inventory losses also because of this Relaxo. But Metro was a clear winner even in last year. So again, I'm not worried here, even if they have increased their inventory by 52% as a result. So that's that. Next, let's just go to the cash flows and see how the cash flows has changed, right? अगर आप देखते हो यहाँ पे cash flows also has increased by कितना हुआ, CFO, right? So even the CFO has increased from 283 to 489 crores. After all the expenses, like not the expenses, आपका depreciation, amortization, foreign exchange loss, right? Everything, if I have to take care, after all of that also, operating CFO before working capital has also increased. Now, do you understand here why the working capital has increased? Remember, in the first point I told you that they don't have any manufacturing plan, they outsource their manufacturing. As a result, देखिए इनका depreciation और amortization cost is hardly anything, right? Just absolutely nothing. If you see the change, 134 say 181 crores, this is absolutely nothing, right? Very minute change also here. Now you understand why it becomes a it becomes it is so unique here, because अगर आप relax होकर देखते हो here, because this depreciation and this cost will increase, and as a result your CFO before the working capital will decrease, because क्या होता है आपका इतना plant होता है, you will have so many machines and all of that stuff because of that. Now see, working capital में कहाँ जा रहा है पैसा? One is trade receivable. यहाँ पे trade receivable has also increased, which means what? Of course, right? यहाँ पे trade receivable increase होगा क्योंकि when you go to metro या कोई भी footwear shop में जाओ, first you're going to pay the product and then first you're going to pay and then you're going to get the product. It is a credit business, right? So of course trade receivable will always increase, which means what? The क्या बोलते, like the metro is able to collect cash upfront, right? So that is one thing. And then if you see payables has reduced 27 crores to 25 crores. Why? This also shows that like the company has bargaining power with its suppliers, right? Although it is not a big change, it is hardly any, but it shows that the company has a bargaining power with the supplier where they can buy the products or buy the raw materials and be like, okay, I will pay you after some time. Or they have or you can tell that they have a really good relationship with their suppliers. So that's one thing. So here that is where the money is going. And I think the big expense here is this 43 crores, जो other current liabilities में जा रहा है, which is again short-term loans, and that is again no problem. Yeah. After that, जो भी पैसा आ रहा है, even after operating activities, you see here, after all of these working capital changes also, and paying the taxes and everything, the CFO from everything has increased from 219 crores to 380 crores, which is a good thing. यहाँ पे ये 380 crores कहाँ पे जा रहे हैं? First is in plant, property and equipment, maybe their new offices, और यहाँ पे plant, property and equipment क्या होता है? You setting up stores. If you see, that has increased by literally by 100%, 50 crores से 100 crores. I'm just taking an approximation. 47 crores से almost 100 crores. Of course, right? You have opened कितना stores stuff? 47 stores in 52 stores last quarter and 19 stores this quarter. So उसमें of course it will go, right? Because you're first of all you're opening your stores in high-end places. So this is completely justified. Then after that, if you see the next majority expenses, ये तो आ रहा है is bank balances. Since they have no other expenses, they might be either keeping all of this in cash in their bank.
Alert from updates available.
Okay, so this is where their investing activity money is going. Pehle ja rahe, like I told you, not much expenses are happening in the working capital. The majority expense hota hai yahan pe loan pe, short-term loan, which is okay. And the other thing is in plant, property and equipment, right? And उसमें उसी से थोड़ा सा dividend जा रहा है. The finance cost that is there is hardly any 0.14 crore, which is not a lot. So this is about Metro Brands ka financials. As you can see, balance sheet is clean. The money that is flowing, majority of the money is flowing either to opening up the new stores, or it is sitting as cash in their balance sheet. So that's it. That's that for Metro Brands Limited. Yeah.